The number one question I get asked from friends and family is, Marcus, what is Forex and what is this trading business all about? It's no surprise this ranks as the top request, as Forex is pretty much everywhere nowadays. You see a ton of ads on Facebook, Insta and YouTube. You probably even saw a Forex related advert before this video. And in the news you have college dropouts claiming they've become millionaires after teaching themselves Forex through YouTube, right the way to get rich quick Instagram traders who empty accounts of more than 1,000 investors and a £3.5 million fraud and just about everything in between. So what is the truth about Forex trading? Is it actually a scam or is it something you can genuinely use to make money? What's up traders, it's Marcus from Logikfx, making financial education easy and saving you time. In this video I will discuss the ins and outs of everything you need to know about Forex and whether it's actually worth your time to start trading it. But before I do that, there is one more in and out that I need you to do, and that's to in and out your mouse click on that wonderful like button. If you want to help other people exactly like you get financial education they can trust, then clicking that like button will recommend them this video. It's literally that easy. It should take you no less than a second and it could drastically help someone's understanding of Forex. So let's get right into the video by answering this question first. What is Forex? Starting on the simplest level, Forex is just an abbreviation of the term foreign exchange, but its function is actually a little bit more than that. If you've ever been on holiday or bought groceries from your local supermarket, you've actually, willingly or not, participated in Forex trading. Yes, that's right, you are already a Forex trader. And you're not alone. Big companies like Microsoft, Amazon, Apple buy a lot of goods and services from other countries. So in order to actually do this, they must obtain the local currency first, exactly like us when we go on holiday. The difference is they will actually exchange colossal amounts. When these companies exchange these large quantities of money, they move the price because the demand for the currency that they actually need is much higher. And for those who haven't studied economic theory, when demand increases, the price increases too. This is happening every millisecond of every single day, which means the Forex prices are constantly moving up and down. And this is how it works. When currencies are exchanged, they're exchanged at a certain price, and this is known as the exchange rate. Like any other market, you know the price of a currency is governed by the law of supply and demand. The best way to understand this law is with a simple example. Imagine there are a lot of people in the UK wanting to exchange their pounds for US dollars. The value of the dollar would gradually increase as more and more people purchase it over time. The exchange rate then will reflect this change in price. It's a bit like when the hand sanitizer crisis we had in the UK last year. It's about March time, where the shelves were being literally emptied by desperate buyers scared of the virus spread, which then allowed shop owners to hike the price to ridiculous levels. Demand increased, so did the price too. And this is where the concept of profiting from Forex trading really came into fruition. The most budding amongst us decided to try and take advantage of these price movements, buying currencies, holding them and then selling them back for a profit. The best way to imagine this is with a practical example that you're actually familiar with. Let's say you live in the UK and you went on holiday to the United States. I know, a long gone fantasy in this current lockdown state, but we can still dream. So let's say you saved up a little bit of spending money whilst you were about to go on holiday, totaling around 1,000 British pounds. You then head to your local foreign exchange dealer and swap all of it for dollars at the rate of $1.3 for every single pound. This means you now have 1,300 US dollars. You go to America and for some reason you forget you actually had money in your wallet. Don't ask, this is just an example, albeit realisticness treading on thin ice here. Who would really forget that amount of money? You've got to be out of your mind. Anyway, you arrive back in the UK forgetting to spend your money. You still have the original 1,300 US dollars that you got from the foreign exchange dealer, and then you go back there and you ask them, can I exchange this back to pounds? But the exchange rate has actually fallen from 1.3 to 1.1. So instead of getting the £1,000 back that you originally saved up, you get back £1,181.81, making a total profit of £181.81 for literally just holding the US dollar currency and waiting for the exchange rate to change. And that is a simple representation of how every single Forex trader makes money. They buy a certain amount of a currency and hold on to it for a period of time, waiting for the exchange rate to move in a favourable direction, and then they swap it back whilst profiting the difference along the way. Now, knowing exactly the best times to buy and sell currencies is where it can get a little tricky. And that's exactly what I teach on my website, Logikfx.com, because you may imagine traveling around the world to each country, going to the airport to swap your currencies and then holding it till it's time to flip it back. It's just not a practical approach at all, and is definitely not what a sensible Forex trader would actually do. So Marcus, what does a sensible Forex trader do then? Fortunately for us, there are online trading platforms that perform very similar service to your foreign exchange kiosk found in airports that allow you to buy and sell currencies instantly and then profit from the difference. These online trading platforms are usually called retail brokerages, who are financial service companies that provide traders access to a platform for buying and selling foreign exchange currencies online. A little bit like your betting apps that you get on your phone. They'll have a list of different currencies and you just select which ones you want to trade, and in a matter of a few clicks, you'll be open on the market. These brokers are open 24 hours, 5 days a week, and it makes trading possible for anybody with a phone, computer, and internet connection, no matter where you are in the world. The way these online brokerages work is they offer you something called a Forex CFD, which is a contract for difference, arranging a settlement between the opening and closing trade prices, which are settled to you as cash. What that means is instead of you going out of your way and actually buying the currency physically, you buy a digital contract with a brokerage that basically agrees the exchange rate you buy a currency and the exchange rate which you sell a currency. The broker will then pay you exactly the profit you would have made if you actually had gone out and physically bought the currency instead. An absolutely wonderful mechanism. It makes trading from home a real thing and is exactly how I personally trade Forex on the financial market. It just saves me time and I get the exact same outcome. The added bonus of using CFDs beyond incredible convenience it offers is the ability to actually trade with more money than you actually have in your trading account and amplify the profit and or losses you make on each trade. This is formerly known as trading on margin, which is the process of making a good faith deposit with a broker in order to open and maintain positions in one or more currencies. Margin is not a cost, it's not a fee, but it's a balance set aside to determine the maximum amount of currency or money you can actually buy. A good way to imagine this is of course with an example. So let's say you deposit £1,000 onto your online brokerage platform. That £1,000 is what the broker would classify as your margin. It's a fancy way of saying the money in your account at a single point in time. Then the broker may say, we offer 10-to-1 leverage, which is another way of saying you can trade Forex with 10 times whatever money you've actually put in your account. So if you deposited £1,000, you can actually trade Forex with 10 times that figure, which equals 10,000 British pounds. I know that sounds wonderful, but it comes with a small print. And that small print is that the £9,000 that you're additionally trading with is lent to you from the broker. This topic is a little bit above the complexity I wish to include in this video, but simply put, the broker borrows that money from an investment bank at the LIBOR rate, which is another way of saying the London Interbank Offered Rate that represents the interest rates investment bank use as a benchmark to lend to brokers and other financial institutions. The broker then lends that money to you, but at a slightly higher interest rate than LIBOR, so that they can make a small profit. The way this works in the simplest way possible is, let's say the LIBOR rate is 3% per year. The broker may charge you 4% per year in order to trade on margin and borrow the additional money. And the way that works is by dividing 4% by 360 to represent the commercial days in a year, which would equal 0.01% each day that you are charged. And this is exactly what you'll see as a cost on your account each day when you're borrowing the extra money. Traditionally known as rollover fees if you want to give it a quick search online. This is one of the costs of trading on margin, but remember, it's not compulsory to actually use leverage. So don't worry if it's something that seems a little bit too complex for now. I always say only use something if you fully understand how it works, and I'll probably make a dedicated video in the future to help you understand it better. Even though this is one of the ways the brokers makes money from you, it is, in my opinion, a win-win scenario. You get to trade with more money, meaning you can make greater returns that should definitely exceed the costs of borrowing that money from the broker in the first place, if you know what you're doing. And pretty much every successful business person I know always uses debt to actually increase their wealth. And if we go back to our previous example, if you remember, we made £181.81 profit from a £1,000 Forex trade by going on holiday in the United States. If we had instead done this through our brokerage account, utilizing the 10-to-1 leverage they offer, we would have made £1,818.10 profit instead. A substantially large difference difference and is exactly why Forex millionaires actually exist today. So trading Forex is nothing to be sniffed at, and when done properly will open your eyes to vast opportunities available outside of your traditional route. It's also worth mentioning here, as of recent, FCA has made the restriction to limit the amount of leverage you can use, and this is to protect traders with less experience from accidentally using too much and losing all of their investment. Trading on margin using leverage is not a toy and is not something that you can just say, oh, I'll have a little go on that on a whim and become an overnight success. It takes practice, experience, and proper research to make sure you know all the pros and cons involved. It's imperative that you learn exactly how to trade using leverage properly, because if you don't, you could end up losing all of your investment, and that defeats the whole point of Forex trading in the first place. So then, is Forex trading worth it for you? The main reason you're probably watching this video. That's a question I unfortunately can't answer accurately without knowing all of your circumstances, but I can give you an idea of what you need as a prerequisite of sorts to have a chance of making money in this game. Firstly, you need to have an interest in the markets and be willing to learn new things. If you're not actually interested in the markets and you're just looking for quick ways to make money, then I'm sorry, Forex trading probably isn't for you. You'd be better off getting an extra job, working the hours, the money's guaranteed, and you know exactly how much you'll be getting. In Forex, your returns vary month to month, and it's not uncommon to have losing months too. All this means is if you're not genuinely interested in the markets, it's an unrealistic expectation to get consistent returns. Trading is a skill for life, and therefore, to make the most from it, you need to apply this skill for life too. You need to have some sort of interest in absorbing content around trading regularly to make sure you're always ahead of the curve and able to make the best informed decisions you possibly can. And if you've already made it this far in the video, it's fair to say you're already on your way to ticking that box. The second thing you need is patience. If you expect to become an overnight millionaire after watching a few how-to videos on YouTube, you've got this game completely wrong. Forex trading is a competency that compounds over time. The key word there being time. You absolutely cannot rush this process. And for those who are new to the channel, compounding is simply the process whereby interest is credited to an existing principal amount as well as to the interest already paid. Compounding can therefore be construed as interest on interest, the effect of which is to magnify returns to interest over time, and so called the miracle of compounding, or the eighth wonder of the world, I like to call it. Put simply, the interest is the money you make on your trades that builds up the money of your balance over time. And when you get good at trading, your money may grow at a rate not too dissimilar to this. The assumptions I've made in this chart is that you invest £3,750 per year into your Forex trading account and consistently make a 50% return on all your capital. Of course, in reality, you can make more or less than this number, but for all intensive purposes, this is a demonstration to signify the general characteristics of the compound effect. As is pretty clear, one of the key traits of compounding is that your money grows slowly at the start. If you notice, it takes 10 years to make your first £1 million, but then only another 6 years to turn into £10 million. The growth is what we call mathematically as exponential, which simply means the amount of money you make will get faster and faster the longer you do it over time. This method is commonly used by the likes of Buffett, Dalio, Elon, Bezos, and nearly every other billionaire that I've actually studied, by compounding pretty much all of their money over time using a variety of different ways. Like they say, there are a million ways to make £1 million, and in this video, I'm showing you how it's possible with Forex. And the final prerequisite you need is to actually have capital or money coming in regularly. Something I've noticed over the time in this field, if you don't already have money coming in from sources outside of your trading account, you'll end up taking unnecessary risk on your trades, trying to make as much money as quickly as possible, or just to cover the cost of living or to impress your friends. This is probably one of the worst things you'll ever do when starting out. The added pressure will not do you justice whilst you're still learning the ropes, and you'll end up getting the opposite results you're actually aiming for. You'll just blow your account and be back at square one. Ideally, you would want steady income and at least a few thousand sitting in the bank so you're financially and mentally stable to take on the new responsibility. So the ideal person then to pick up trading, if that really exists beyond my opinion, in summary, needs a keen interest in the market, patience to let compounding kick in, and already have at least one alternate income source beyond their trading account. If you don't have all three of those prerequisites, then I believe it's not the right time for you to start trading Forex. But hey, I don't control what you do, so do what you believe is best by considering all the information I've condensed into this short video for you today and conduct your due diligence. and you'll end up okay. To conclude then, Forex trading is a great skill to have and is definitely worth doing if it's something that interests you. And if you're watching this video, I'm assuming it does interest you, so why haven't you started already? Nothing is stopping you and the world is genuinely your oyster. I've actively traded Forex and a few other asset classes for a very long time now. I absolutely love the feeling of getting paid based on how well I predict the future, and I am thankful that I've been able to achieve many of my life goals because of it. And with that said, guys, it's been a pleasure to discuss the meaning of Forex with you and give you a little glimpse into one of my greatest passions. I hope I've answered any questions or doubts you've had about Forex as concisely and effectively as possible, but if you do have any other questions or further questions or are confused about anything I've talked about in this video that is of course Forex related, drop a comment below and I'll respond as soon as I can. And for those of you that are ready to take that leap and want to start your trading journey and become a Forex trader, you're definitely going to want to check out Logikfx.com. Honestly, it's the best trading website there is, and I'm not just saying that because I own it. I know exactly what other alternatives are out there, and they don't even touch the surface of what you'll gain through Logikfx, and it's not just me who thinks this. We've been nominated by Global Banking and Finance Review as the best new Forex education and training in the United Kingdom for 2020, and our trading technology has been referred to as the best Forex automation tool for retail traders by eForex magazine. And if that's not enough to show you how proud I am of Logikfx, we have over 6,500 subscribers who take advantage of the vast resources we publish every single day. And don't worry if you're completely new to this and feeling a little bit nervous to get involved. I remember that exact same feeling when I first started out, and a decade later I'm happy to say it's the one decision I will never regret. Also, I'd like to add, everybody at Logikfx is super friendly, helpful, and most importantly experienced. It was important to me to build an inviting culture where everybody can feel comfortable no matter their history or their background, so you can have the peace of mind that you're in good hands and you're learning from trustworthy people that know a thing or two. I'm genuinely so honored to be part of the journey that has helped thousands of traders reach their goals, and I hope I can be part of that journey with you too. So, if you want to become a Forex trader, go to logikfx.com, and that's spelt with a K, Logikfx.com. The link is in the description. I'll put it in there so you have quick access to it. Till next time, Marcus from Logikfx, making financial education easy and saving you time.